Good morning, it's Allison.
Good morning. Everybody's still getting settled in, so we can get started here in a couple minutes.
Okay. Yeah.
All right, Commissioner Hayward, are you ready to get going?
Yes, I sure am.
All right.
And I would like to hand over the duties of chairing this meeting to the chair, who is there in the office and can more easily recognize when people want to be recognized and all that good stuff.
Thank you. All right, well, good morning, everybody. We'll go ahead and get started. Ms. Linker, would you like to call the roll?
Commissioner Hayward,
Here.
Chair Matich.
Here. All right, we'll go ahead and proceed to item 1. This is an update on the sponsored committee regulation. We have Commission Counsel Zachary Norton here, along with General Counsel Mr. Bainbridge. Good morning.
So good morning, Chair Matich and Commissioner Hayward. I'm Zachary Norton, Legal Division Counsel, and I'm basically here just to answer any questions about sort of the timing mechanism under the sort of proposed options that we had discussed at the prior law and policy.
All right.
Yeah, I don't have any questions, actually. I guess I thought that because this was significantly different from the sort of draft that had been kicked around for a few months previous to this, maybe having it up on the agenda one more time in case somebody wanted to get their say in, about this being a better approach or a lesser approach. I mean, at least giving people one more time before the meeting. So that was really my motive in asking for this to be up is just because it was significantly different. I thought we'd give the regulated community and other people a chance to comment again.
All right. Well, it does not appear that we have, I don't think, anyone here who wants to speak on this particular item from the public. I did have a question for you, Mr. Norton, and perhaps you can help me better understand something. On page 3, with respect to the staff has identified 2 different options for the timing of when the 80% determination would be made. And then at the law and policy meeting, Commissioner Hayward and I discussed a possible 3rd option. And so my question for you is, could you explain for the benefit of the public the difference between the different timing options for that determination, particularly with respect to what information, particularly close to an election, would be available under each of those approaches, so we can better understand the consequences of our choice?
Yes. So Under, let's see, we'll call this option one as it was identified in the original memo, and this would be where the committee makes this determination at the time of the filing of each campaign statement. So if we go by applying that rule, we'll take the March 3rd primary election as an example. So that means that this determination would be made on December 31st, January 31st of 2020 for the filing of the semi-annual, January 23rd, 2020 for the filing of the first pre-election, February 20th, 2020 for the second pre-election. And those dates would be then before the March 3rd primary. So you would have multiple opportunities for that disclosure to be made. Under option two, where the committee would have to make this determination at the end of each calendar quarter and any time during the 90 days preceding the election, taking again the March 3rd primary as an example, the triggering dates there would be December 31st, 2019, March 31st, 2020. These are for the quarterly statements, then June 30th, 2020. So looking at just the quarterlies alone, you really only have December 31st of 2019 as a date that would trigger this review. But when you add in the 90-day period in addition to the quarterlies for that requirement to check, the 90-day period covers December 4th, 2019 through March 3rd, 2020. So by adding in that 90-day window, you are including review before the primary election that would otherwise not occur if you were just using the quarterly dates. So I think that's kind of the difference in those three options, particularly if we're only using the end of each calendar quarter as the review date, we would really miss a lot of activity under the March primary. Again, that would the only quarterly date before the March primary would be December 31st of 2019. So absent a 90-day, you don't have any review requirements beyond that.
Okay, so if we were sort of distilling this down to the highest level of pre-election transparency for a change in sponsorship,
Yes.
option two would be the sort of at the top of that list, would be the most transparent.
Yes.
It would take up until the day essentially before the primary.
Yes, that is correct.
All right, and then the second most transparent would be the first option, which would disclosure would go up until, or the determination would have to be made as late as February 23rd prior to the March primary.
Yes, February 20th,
20th.
Prior to the March primary, but yes.
Okay, but essentially 2 weeks before the
Yeah.
primary.
Yes.
But option three would be the sort of the least transparent in that sense, because any activity between January 1, 2020 and the March primary, any change in sponsorship would not be then captured and reflected on the disclaimers. Is that true?
Yes, that is correct.
Okay. Commissioner Hayward, did you have any thoughts on that?
So logistically, a sponsored committee needs to sort of check that 80% threshold, every day during the 90-day period?
Mr. Norton, would that be the case under option two?
I suppose that would be the option. I mean, I don't know, in practicality, if nothing's happening, they probably don't need to check every day. But I think, if.
Sure.
But yeah, if a contribution comes in, yeah.
Well, yeah, or there's no question that the sponsored committee is getting 80% because it's getting 100%,
Yeah, exactly.
I can think many situations, and so it would be these sort of almost kind of on the bubble, multi-sponsored situations, and we all have heard my opinion on what I think of that. I'll be interested in seeing what other people think. I mean, I feel like making the determination at each filing, where you're actually, like going back and looking at activity anyway, is probably pretty good, and maybe good enough. But I'm not hugely wedded to that point of view right now. I'll be interested in seeing what people have to say.
Commissioner Hayward, when you say at each filing, are you referring to option one?
Yes, the option one.
All right, because I think staff understood our recommendation after the last law and policy meeting to be what they've identified as the third option, where the determination would only have to be made up until the end of each calendar quarter. And after hearing Mr. Norton's presentation, I'm myself wondering whether we want to change our recommendation to embrace option one as presented by staff.
I mean, the option one and option two alternatives on page 3 were the ones I was focused on today because that was the last thing I read. So between those two, I think I prefer option one just because I think the burden on filers is reasonable and the information we would get from filers is pretty good.
Okay, so I agree. At this point, then, should we formalize that as that would be our recommendation to the full commission next week? That
Yeah.
of these options, we think
Yeah,
option
yeah.
one is the best?
Why not? I mean, why hide the ball? Yeah, let's let them know.
Okay. Thanks. I think when we last met, I think I probably wasn't entirely clear on my thinking on that, so I may have led to some staff confusion here, so my bad.
Well, and we made a turn in a very different direction at that last meeting, so it doesn't surprise me that, we would want to think about it a little bit.
Okay. Mr. Norton or Mr. Bainbridge, do either of you have any other information or questions at this point on this reg?
I have a question. Do you want to see then a version of the regulation with option A put in? So we'll have both options? Because right now we have the one with the law and policy recommendation from last time up on the agenda. Do you want us to put up another version with the option one incorporated into it?
That makes sense to me. Commissioner Hayward, what do you think?
Yeah, yes, that would be helpful.
Okay.
All right. Chief Enforcement West, I see you raising your hand.
It wouldn't be an option, then it would just be the language one.
Okay.
Hi, Galena West, Chief of Enforcement. I just wanted to make the point, Zach did touch on this, but I just wanted to point out that the last 16 days before the election, there would be no review. So advertisements that would need to be changed to reflect sponsorship during those 16 days would only fall under the 10-day review as required by statute. So I understand 90 days is quite a burden, and we all agree that 90 days is a very long amount of time to do 24-hour reports, much less check sponsorship. But I would just bring to the commission's attention, as we will get complaints that sponsorship has changed in the last 16 days coming up to the November election, and the advertisements, especially digital, that could be changed to reflect that, will not be changed as option one's proposed.
Well, the only option where that would not be the case is option two, though.
Certainly, but you could always address plus the last 16 days after the filing of the second pre-election, as was the old LCR rule back in the day. But that's just my 2 cents. I just wanted to bring it to the attention in case the commission sees a bunch of complaints that we dismiss because for the November election, the name was not required to be changed.
All right. Can you remind me again what the process is when a change in sponsorship is determined and you already have existing ads out there? Isn't there a window of time that committees have to change those ads?
Sure, for print ads, it's when the next order. For digital ads, I think it's 5 days in the advertisement rules. Anybody expert on ads can help us out. But, so there is a leeway time, but you're talking about that last bit. So that's what I would just bring it to everyone's attention so we all know that that last push before the election, those changes won't be made.
In your view, what would the ideal rule be?
It'd be A plus the last 16 days after the second pre-election.
I'm not against that. I think that the 90 days seemed egregious to me. I'm not sure how big the set of sponsored committees are that get into this situation. My guess is they're probably the ones that are trying to be maybe less transparent. So maybe a daily review in that last 16 days is important.
I would agree with you.
I would agree as well, and I think, Commissioner Hayward, you've raised the issue of sponsored committees being sort of an alter ego with a single sponsor, and I think particularly at the local level, that seems to be the case, just from kind of a cursory review that Dave and I had done. And when you see these local committees, they usually have one sponsor, so for them, it's not going to make a difference. It's not going to be burdensome because they're getting 100% of their funding from their single identified sponsor.
All right. Ms. West, just so I make sure I'm following this. So option one, you would like us to amend option one to include that the determination be made every day during the last 16 days following the last pre-election report?
Yes.
Okay. All right. And Commissioner Hayward, you're in favor of that?
Yeah, I think right now, I mean, again, I'm still trying to kind of go through my head sort of what the trade-offs are. And again, I think we'll benefit from having, some discussion about this and hopefully some comments from the outside world. But yeah, that seems reasonable to me. Again, this whole issue really makes my head hurt because I'm so used to how the federal regime works, where a separate segregated fund is in fact the alter ego of a corporation or a labor organization or a trade association, or you don't share that separate segregated fund with somebody else. There's no such thing as two quote unquote sponsors, and I'm stuck there. So whether or not in a universe where we allow multiple sponsors, how frequently they have to figure out that they've got a new sponsor is sort of like, oh my God, this is just a complexity that we shouldn't be having to worry about. But since we have to worry about it, yeah, let's go forward with the change that Galena has raised. I think it's probably at least a good launching point for the conversation.
All right. So, Mr. Bainbridge, then I would amend the last thing I said to you. So, yes, we would like the draft reg to reflect option one as the preference of law and policy as amended by Commissioner Hayward's request. That Chief of Enforcement Wes urging.
Okay, got that.
Thank you.
Thank you. All right, anything else on the sponsorship reg? Seeing none. All right, we'll go ahead and move on to item 2 then, update on return of excess contribution regulation. Good morning.
Good morning. Caitlin Green, Commission Counsel. So I guess I'm just here to give an update on this regulation. So it was up for pre-notice in February, and we have not received any public comment. It was also sent to OAL on March 3rd with a similar draft that was presented at pre-notice. Commissioner Hatch did bring up 2 concerns at the pre-notice hearing, and one was physical checks being deposited from a single contributor that were over the limit. Staff does believe that subdivision A of the regulation addresses this concern with the actual knowledge limitation. If a committee receives a single check from a single contributor that's over the limit, on its face, they're going to have actual knowledge that it's over the limit, and it cannot be deposited without a violation occurring. And then the other concern that he brought up was the 14 days possibly being too short for electronic deposits. I did reach out to Act Blue and got some information on how they run their system in general, and they pretty much give a notification instantaneously when a contribution is received, and the committee will be able to view the contribution and all the information on their dashboard, on their account, and they can issue a refund immediately if they notice it's over the limit. And that would even be before a deposit has been made, before it's transferred to the committee's account, because it does take about 2 to 4 days to transfer to the committee's account. So if they do get the notification, say they sign up for email notifications, they're going to get it immediately, and they'll be able to issue a refund before the deposit, and that'll lead to no reporting requirement. However, they would also have the opportunity under this regulation to issue the refund after it has been deposited within 14 days. And staff does believe that is sufficient time, as they are aware of this information immediately, at least under Act Blue. And also, as of right now, the regulation doesn't give them any opportunity to return these funds. So, but yeah, that's the update I have so far. So if you have any questions, I'm happy to take them.
Thank you. Commissioner Hayward, do you have any questions?
No, I don't.
All right. Do you have any public comment on this item? Seeing none. All right. Thank you very much, Ms. Green. Good work. All right, go ahead and move on to item number 3. This is a discussion of options for gathering information on behested payment issues. With respect to this item, because this is one that I had asked staff and Commissioner Hayward to add to our agenda, it seems to me that over the last, since I've certainly been on the commission and over the last few months, there's been an increasing amount of discussion around behested payments. And it's sort of, in my mind, it really runs the gamut. There are issues, I have heard from stakeholders that in some circumstances, they are not sure how to comply with the rules, that the rules are ambiguous to them in certain circumstances. And I think, they're asking for greater clarity there. And I think that's consistent with the commission, one of the commission's priorities, which is to bring clarity to areas to improve compliance. So I think there's some information there that we probably need. There are certainly some policy-related issues about what I would sort of loosely characterize as potential gaps in our current rules with respect to behested payments and whether we want to change some of those policies and other things. And so I think, to my mind at least, what I would like to do is today think about what a good process would be to begin gathering information from stakeholders and others and from staff to develop essentially a list of what are the issues, the impediments to compliance, what are the gaps, and then proceed in a thoughtful, deliberate manner to try and address those in a way that again, is consistent with the goals of the Act to bring transparency and clarity to the law. So, I always sort of default to, I think we should have an IP meeting. I think we should invite stakeholders to sit down and have a frank discussion and have them identify what are the areas that are challenging for them today, what are the things that are unclear today, and have staff come to the table from both a legal and enforcement perspective. What are the challenges that our staff confronts with the existing regs and the existing statute? Get everybody in a room, and then let's start brainstorming and thinking what the best approach to those problems are. So that's my thought. That's my wish list and approach. But Commissioner Hayward, I'm curious what your thoughts are.
Yeah, I think that's good. I think I would like to know, and this is something I can take care of sort of on my own, but I feel like I want to be refreshed into how the whole behested payments disclosure regime came to be. I'm guessing it was motivated by a scandal or a problem. I don't remember right now what that was. And my feeling is lots of times you can sort of see where the gaps are forming because there have been similar gaps before. Does that make sense? In general, I'm concerned more about the behested payments process being used for the personal profit of the person doing the solicitation, whether it's to a foundation that person controls and actually, subsidizes their lifestyle or their income or their family's income with, things like that. I think, I don't think we're worried about elected officials who also happen to be leaders of their community going out and raising money for the Boys and Girls Clubs. I think, it's this sort of other more self-dealing kind of area that at least that troubles me. And also, if there's confusion in this area, I think that's interesting. I mean, I did note in the legislative report that there's something that, then maybe we'll get to it, something looks a little bit like a carve-out for PUC commissioners. But it didn't look like a statement of the law that was different from how I understand it works right now. So maybe that's the fact I don't understand it correctly, or the fact that it's maybe just a placeholder for something else. I don't know. So, yeah, long-winded answer. I think your approach sounds good. I'm more concerned about the sort of, the ability to engage in some profiteering using this process than really anything else. Though, the disclosure is important too, to the extent that people think that behested payments look like a in-run around, contribution disclosure and contribution limits. So, yeah, it'll be interesting to see what we learn.
All right, thank you, Commissioner Hayward. Is there any public comment on item 3 at this point? Seeing none. Mr. Bainbridge, what do you think of holding an IP meeting or some other mechanism to gather stakeholder input and to have staff internally preparing their own list of issues and matters that they would like the commission to consider with respect to behests?
And that would be in advance of maybe a larger commission discussion of the issue. Is that the thought?
Yes. I think in a perfect world, we would engage in outreach to stakeholders. Staff would simultaneously or in close proximity there too, be developing their own list of issues with respect to behests. And then perhaps that report and that feedback could be presented to law and policy. Then law and policy could perhaps make some recommendations to the full commission after we've done that. But I see this, I would like to again emphasize, I'd like this to be a very deliberative, fact-gathering type of approach. I don't, in this particular area, as with all areas, I'm sort of loath to just simply be reactive to what we may read in the newspaper. I want folks to come to the table, identify what the real issues are, and then let's sit down and try and fix those issues.
Okay. Yeah, I think that makes sense. There's a bill in the legislature right now, which is in this topic area, and then there's been a number of media reports recently. So it makes sense to get all those different parties together to hear their perspective on it.
Okay. And is that something that you and your staff can schedule for us and report back to us on?
Sure.
All right. Thank you very much. Appreciate it. All right. At this point, then, we'll go ahead and move on to item 4, our legislative update. Leg Director Ung, welcome to the table.
Thank you, Chair Matich. Good morning, Commissioner Hayward. For the sake of this discussion, want to kind of lay out the direction I want to go, and hopefully that we can do this in an efficient way. Is one, give an update on where we are with our current legislative development and the status of our potential sponsored bills. 2, move to the staff recommendations on the 4 bills that staff has recommended positions on. And then the 3rd, we can enter into, if the chair permits, a wide-ranging discussion about a number of issues. So if that's okay with both the members of the committee, I'll go ahead and proceed. Not hearing any objections.
Sounds great.
As far as legislative development, you can see that we have 2 bills that were introduced that were originated from the commission, one being the limited liability companies issue and the personal use of campaign funds and enhancing the penalties related to those violations. Both of those are being authored by Assemblymember Berman, who's the chair of the Assembly Elections Committee. We're grateful for his leadership on that, and he has amazing staff with the Elections Committee that's going to be helping us with those bills. And so those are moving forward well. The next thing is the use of public funds in campaigns. We have found an author, and he's getting final language back from Legislative Council after some discussion, a preliminary discussion with his office. And the language that's coming back still answers 2 of the planks that the commission asked for, one being that there be clarity in the law, increased clarity in the law, and the second, that the commission be given administrative authority to pursue penalties when there are use of public funds. The last piece, there was there were some commissioners that were interested in seeing personal liability put into the bill. Currently, that is not something that Mr. Levine has included in the bill, but that he is willing to discuss as the bill moves forward. And feel free to stop me at any points, Commissioner, if you have any questions. The next bill is our e-filing of Form 700 forms, sorry. And that legislation isn't in print yet, but the spot bill for that legislation is Assembly Bill 2599 by Ms. Rivas. We've been working closely with her office and the staff from the Assembly Ethics Committee in hopes of resolving some issues that arose while they were reviewing the bill for authorship. The bill does enact e-filing for all what we call 87-200 filers, which are essentially all elected officials from the county, the city, the state level. And in addition to that, there is a group of individuals, designated employees of the legislature, who would also file electronically with us. Because of that addition of legislative employees, Ms. Rivas has expressed some privacy concerns for those employees. Our current policy is that we don't, our current practice today is that we don't disclose Form 700s of legislative employees, and that we, when we do disclose information, we redact the signature block of legislators and their employees if they're online. And so essentially she is asking that those provisions from a privacy standpoint be codified into law. I think from staff perspective, we're okay with that. Another concern that she brought up relates to the accuracy of gift reporting, specifically invitation-only events. And this is where her staff has raised what appears to be a pretty legitimate issue in the statute as it relates to timing of when legislators are notified of invitation-only gifts. So and Dave can correct me if I'm wrong, but under the regulations, a public official has 30 days to either accept, donate, or buy down a gift. However, under our state reporting rules or state notification rules, a lobbyist employer has until 30 days after the calendar quarter to notify a public official of the value of a gift. And so if a public official has 30 days to return or buy down a gift, but the people who need to notify that public official of how much that gift isn't until upwards of 100 days later, you could see where there's a conflict there and officials not having enough information to make the decision they need. And so we've been working closely with them to try to resolve the issue that they've brought up. I think we will see a version of the bill potentially introduced in the next few weeks that is close to addressing the issue, but this is where the commission we need to have a further discussion with the commission about timelines and how many number of days for notification and those types of issues. Right now, they are proposing what we call it a 120-day timeline. What they're saying, it's a 30-day after the end of the calendar quarter. So essentially, a public official would have 30 days after the end of a calendar quarter to decide whether or not to return, donate, or buy down an invitation-only event. Now, it's a little awkward to say you're going to return or donate an invitation-only event. I don't know of any circumstances in which you can attend an event and then return or donate that gift. But as far as buying down, that timeline seems a little long for staff. And so we've been trying to figure out one, kind of all the parameters and kind of the factors that go into that. And one of those factors is the current statute allows a lobbyist employer to notify a public official of activity expenses or gifts in the lobbyist report, which isn't due until 30 days after the calendar quarter. And so they're really attaching it to kind of the current structure. But this is an ongoing discussion, and I think at this point, we definitely want to bring it to the attention of the commission, because you may see a version of a bill that the commission wanted introduced that perhaps has additional provisions in there that may be problematic to the commission. And I think we may be in a place to work with the author to try to narrow in kind of what the real issues are, and also get a policy preference from the commission on that particular issue that we still have differences on.
All right, thank you. So just so I'm clear then, and the public is clear, the commission is approved sponsoring a bill with respect to Form 700s. When you were out looking for authors, the author that expressed interest in this has asked to include another provision that has nothing to do with Form 700s, has to do with gifts received by public officials when they attend in invitation-only events by a lobbyist employer. So we're talking about apples and oranges, essentially. Is that accurate?
You know, when I talk to their staff, they believe they're related, partly because of the accuracy of the report that's being filed online, that they don't want a report being filed online that doesn't have the correct amount, that reflects whatever the invitation-only gift is. And so that's how they have related the two. So I wouldn't say they're essentially apples and oranges, but there's a hybrid there of half apple, half orange. That
Wasn't on our radar.
It wasn't on our radar, yes. But I think they have identified a legitimate issue in the timing. I think we just need to find a solution that everybody is happy with.
All right. So this is specific to invitation-only events hosted by lobbyist employers. Are there other types of hosts who are not lobbyist employers who invite officials to attend their events?
Yes, I'm sure there are.
And what's the rule with respect to their obligation to notify a public official of the value of the gift? Is it different?
I'm going to look to my general counsel on that one.
Not in current law. There's no distinction drawn that I'm aware of.
Okay, so every host of an invitation-only event currently is subject to the same, under current law, the 100 days.
Well, sorry, the lobbyist employers are the ones that have to provide a copy of their lobbyist employer report at the end of the calendar quarter to the official, the notice requirement. If you're not a lobbyist employer, I don't think that requirement applies, because you're not filing the statement.
All right, so let me back up a second then. Let me just ask it this way. If I'm a public official and I attend an invitation-only event and I want to know how much it costs, what's the normal practice for receiving that information from the host for somebody who isn't a lobbyist employer?
I assume they ask for it
Okay,
to report it. I don't know from a practical standpoint how that happens.
okay, all right. How do other states approach this problem? Do they do 100, 120 days strikes me as an incredibly long time. But what do other states do?
Yeah, in my research, most states of the 40 that I've looked at don't even have a timeline, a safe harbor, for when a public official can accept or buy down or return a gift. Those states that don't have that timeline, they take the action of the public official who donates, returns, or buys down a gift. They take that into a factor into their investigations. If an official receives a gift, an investigation begins, but it appears that the official returned it in a week or within a reasonable time versus returning it 2 days before they hear about the investigation, right? Those are factors that they take into account. The other states that have timelines, they're very much like like California's current timeline. Arizona has a 15-day timeline, but most of the other states that do have timelines have 30-day timelines for buying down and returning gifts. And so that's, to answer your question directly, that's kind of what I've discovered so far.
All right, so 30 days is sort of in your view, sort of the standard, the average standard that other states use?
Yes. However, I don't know if other states have the same kind of lobbying reporting conflict that we've identified at this point. So I'm not sure if they're running into that same timing issue.
All right. Commissioner Hayward, do you have thoughts on this?
Not right now. I mean, I guess I'm a little confused as to why the value of the invitation-only event is reported as this sort of summation thing after the quarter, when couldn't you just, at the time you're invited or you go to the event, learn what we've decided that everyone's getting a gift of $55 and you can only get a gift of $5. So you've got to figure out how to pay back 50 of it. I mean, that would seem to be a much less convoluted way of doing it, but that's beyond the scope of what we're talking about right now, so never mind.
I think that's squarely in the scope of what we're talking about, right?
My understanding is that part of the issue that arises is that our current regulation requires kind of a pro rata share be distributed among public officials who attended the event. So yes, the host may know how much the total event costs, but they do not know until the day of the event or the conclusion of the event how many public officials actually attended in order to split up the equal share among all of the public officials. And so
So bizarre.
And so they need this additional, they need some additional time to make that calculation, how much time that is. I don't know of any data or any anecdotal stories, but getting that valuation is an after process, not something you can do beforehand. At least that's what I've been informed. And then also the 120 days, again, is latched on to the fact that the statute currently allows lobbying employers to just disclose this in their activity expense report.
Right.
Versus just a letter that's sent to a public official.
Right. And that part, I think, is, lovely that we make it so easy for them, but also kind of impractical. And the notion that a value of a gift depends on how many other people get the gift is, I'm sorry. I thought sponsored committees was making my head hurt. This is making my head hurt too.
So I guess I have sorry, Mr. Bainbridge.
Yeah, I would just add when we're looking at this, the lobbyist reporting, the requirement that they provide notification of a gift at the end of a calendar quarter, I think is intended, one, so that the legislator or whoever the official is can check that against their own records to ensure when they go to report it at the end of the year on their SEI, because remember, they only have to report these things once a year, typically, unless they leave office or are running again as a candidate. It's to ensure they get that accurate at that point. I don't think the intent was ever to put this requirement in there so it would facilitate buying down or returning gifts.
Yeah, but the filer also wants the opportunity to buy down an excessive gift or return a gift that they, and yeah, okay. It'll be interesting to sort of see how this evolves.
I mean, from my standpoint, I mean, tell me if I'm wrong about this, but I mean, it's both things, right? I mean, I understand, Mr. Bainbridge, your point that the lobbyist employer report is intended to allow a check for the annual report by the member. But there is a more immediate, if you're attending an event, you do want to have some idea of what the value of that is, so that you can come into compliance with the law, whether you can accept it, whether you need to return it, buy it down, whatever, right? So, I mean, I think in what I'm hearing from you is there's no currently there is no mechanism to ensure that an elected official has that information within the 30 days that they currently have to decide what to do with the gift. Is that true?
That's right. There's nothing that requires them within some period of having an event to report to the attendees of the event what the value of the gift would have been.
Yeah. So can I ask a practical question? So I'm an elected official. I attend an event. They don't tell me. And in good faith, I ask, what is the value of this? And say, we can't calculate this for whatever reason. I may be skeptical of that, but that's the response they receive. So they are not getting anywhere with the host. And the elected official then makes an educated guess. But suppose that their educated guess is inaccurate, and for some reason they trigger an enforcement action. Are there actions to, in good faith, try and get the information and try to either buy it down Are those taken into account, similar to what Mr. Ung was talking about, how other states approach this?
In my experience in enforcement of a number of years, yes, it certainly would be taken into account. An attempt to report the right amount would weigh heavily in terms of mitigating factor.
All right. Chief of Enforcement West, do you want to comment on that?
Hello, Galena West again. For us, there's also a regulation about buying down the gift and when it causes you a conflict. So there's a whole other layer to this discussion of over-the-limit gifts causing you a conflict of interest. And so if the buy-down period is not short enough, then a conflict of interest could result. And whether we believe that to be inadvertent or intentional, it would be all a matter of proof at that point. So it is a tricky situation, and we're always sympathetic in enforcement to people that are actually making good faith attempts to either, collect debts or get information about gifts or get information about behested payments. And it's just a matter of when that just becomes a front to be able to do what you want to do, or if they're good faith efforts. And so I think any kind of clear rules that actually give us this guidance as to when something has to be done, and, putting onus onto the other side in order to get it done, whether it be through supply and demand, where these public officials don't participate with these nonprofits or whoever lobbyist employers, or if it's through legislation that puts some sort of burden on them in order to have some sort of obligation under the act. I mean, I think maybe that we look more globally at a solution for this as opposed to time frame because of the conflict of interest issue that will overlap.
I think I may know the answer to my next question based on your comment, but I'm asking anyway. What's your view on the current, from the Assembly Member's Office's 120-day approach? I mean, how do you feel about that from an enforcement standpoint?
It's very troubling. It's, once you start extending time periods over and they can go into different calendar years and you have a lot of trouble tracking to make sure that people have gotten the information that they need to get and they've reported on the correct report and they haven't had a conflict of interest in the meantime. I mean, how would we approach something where they say they had no idea, they reported it under your scenario as under the gift limit, they make a decision, and then they find out, oops, it was over the gift limit, oh, I'd like to buy it down now. So does that eliminate the conflict of interest? So for me, it makes a lot of unanswered questions that would become problematic, that maybe the solution is more from a different perspective and not necessarily an extension of the time frame.
Do you, in your view, do you think perhaps a simpler, more direct way of getting at I think, a legitimate problem of a public official not currently, under the current regime, being able to get that information, imposing a duty on lobbyist employers, if they're the ones apparently that are the issue here, to provide that type of notice sooner, within the 30 days? And maybe they provide a notice within, I mean, we can talk about what time frame is appropriate, but within 10 days of the event, and then the public official has 30 days from when they receive the notice to accept, reject, or buy it down. I mean, does that make more sense?
Certainly. I mean, lobbyist employers have traditionally been considered more sophisticated players under the act that understand their obligations, and those obligations could be modified in order to address the situation.
All right, thank you. Commissioner Hayward, any additional thoughts here?
No, I think Galena's comments are very interesting. The conflicts issue had escaped me, so yeah, we don't want to put in the statute something that makes another part of the statute not work.
Right, and to that end, if we can just sort of, instead of being down in the weeds talking about the different options here for gifts, sort of take a step back. This was not part of our original proposal. I want to circle back to that. We had a pretty straightforward request with respect to SEIs. It's my sense that if there is a valid concern with respect to gifts and notification of gifts, that I'm happy to work collaboratively to try and solve that in a way that makes sense for our agency and is consistent with the goals of the act. It does not strike me that the current approach described by Mr. Ung and that proposed by the author's office is correct, though, in that way. It seems,
I agree.
I think Ms. West used the word troubling. I would echo that. It's very troubling, actually.
Yeah.
So I think I just want to make very clear that I don't think the commission has an appetite to go down the road where we would be okay with this provision staying in a bill that we want to sponsor under the approach that they're currently offering. It would have to change significantly, and again, be something more consistent with, I think, what Ms. West described.
And to come to the defense a little bit of Ms. Rivas, there's a couple factors happening here. One, I think commission staff felt pretty limited in what it is that we felt like we could negotiate with her office based on the authority that the commission gave us related to this bill. And two, she's under certain legislative deadlines to get the language into print so that it can be referred to committee. And so this is a start of a very long legislative year. And I think their staff may be listening to this meeting, and there's definitely elections committee staff that are listening to this meeting who will take all of these factors into account and to try to figure out, I think, the right solution to try to get us to a positive position on this bill.
Right. No, I appreciate that. Commissioner Hayward, anything further on this matter?
No, I mean, I think we've opened up a box of problems. It would be nice if we had a clean e-filing of Form 700's piece of legislation and then maybe something else. But
Yeah. I mean, Mr. Ong, let me just ask you, is it possible to bifurcate these two matters legislatively? I mean, the commission we were focused on the SEIs. We weren't focused on this. It may be a good issue for us to consider and weigh in on, but is it possible to bifurcate these things?
By bifurcate, you mean put in two separate bills?
Correct.
I think it's not impossible. Anything's possible in the legislative process. I just don't know if Ms. Rivas has another vehicle. I mean, that's a more logistical discussion that we need to have with her office, and to see if she either has another vehicle or if somebody else has another vehicle that we could use. I think there's also an interest, as I mentioned earlier, that they believe these issues are related and they're germane to each other. And so they may wish to see like issues in the same legislative vehicle. And so you have those two kind of factors weighing against each other.
All right. Well, I think at a minimum, I mean, this has been a very helpful discussion, I think.
Good.
It's a tough issue, and I think that, you guys have done a good job clarifying it, at least in my mind. I do think that this is something we need to brief the full commission on, and get the full commission to weigh in as to whether or not they want to allow staff to continue negotiating a fix to the gift problem as a part of our bill on SEIs, or whether we would prefer to take some other approach. But I do think, to the extent the commission is willing to do that, because the author believes those issues are related, I just want to emphasize again, I think the commission will want to have the parameters of what is an acceptable fix to the gift limits pretty tightly defined by the commission. So,
Okay.
all right. Thank you.
Thank you. Moving on to the next bill. That conversation went a little more broad than I expected, but that's fine. The next bill that I wanted to update as far as development is the cleanup to the local default contribution limits. Now, this is not a bill that we are sponsoring, but it is an effort that we were essentially raising the issue with legislators. Mr. Mullen, who's the author of the bill that authorized the local default limits, is carrying that bill, and we have a recommended position on that. The last legislative development issue that I want to highlight substantively at this time is our bank account bill that was introduced last year. Now that the election has concluded, we believe we may be able to sit down with the interested parties who raised some concerns about some of the bank account and accounting issues, and have some amendments to present to the commission at the April commission meeting. And so I wanted to just give you a general update on that.
Thank you.
If there's no questions, I'm happy to move on to the staff recommended actions in the March legislative report. asking for a sponsorship position on the two Berman bills, 2407 and AB 2505. Mr. Berman, again, has been a great author in working with us on these. I think this recommendation from staff and a vote by the commission is mostly a formality at this point. But I wanted to still go through the process and make sure the staff recommendation went forward on those two bills. The third bill with the recommendation is Assembly Bill 2151 by Mr. Gallagher. This is a reintroduction of a bill that was introduced last year that dealt with local filing officers posting campaign forms online. Mr. Gallagher had gotten the bill out of Appropriations Committee late in the first year process, so much so that it didn't meet certain legislative deadlines, and so it died via procedure. And so he reintroduced it, and we are asking that the commission adopt the position they had previously, which is supportive amended, so that we can align some of the retention periods that are in the act, so it's consistent, and then some more really non-substantive but still important language changes in there in regards to what the links look like on the websites of these filing officers, so that voters have enough information to decide whether or not they want to click on that particular document. And the last bill is a bill I just went over, which is Assembly Bill 2889 by Mr. Mullen, which deals with default local contribution limits. And this is the cleanup bill to address two issues. One, how the bill applies to jurisdictions with voluntary contribution limits, and also how default contribution limits apply to jurisdictions that have partial mandatory contribution limits, like the County of Sacramento that has adopted contribution limits on its Board of Supervisors, but is totally quiet and unspoken on their district attorney and their sheriffs. The cleanup proposals that Mr. Mullen has put forward is that the default local contribution limits would apply to any jurisdiction that did not have a mandatory limit. So if you're a jurisdiction that has a voluntary contribution limit, the default would apply to your jurisdiction. I think the logic there is a voluntary contribution limit isn't really a contribution limit if you have to opt into it. And then to deal with the kind of split jurisdiction issues like Sacramento County, he's proposing that for those offices that are unspoken in the ordinance, they would have the default applied to them. So in the sake of Sacramento County, sticking with this example, the default would not apply to the Board of Supervisors, but would apply to the district attorney and the sheriff. And so those are the two cleanup proposals that Mr. Mullen has put forward to address the issues that we've raised in the current implementation of AB 571. And I will leave it at that, Mr. Chair, to see if there is a motion.
I have a question about 2889.
Yes.
Is there still a lingering issue about judges?
I don't believe there is. The author, Mr. Mullen, got some informal advice from legislative counsel that judges are a very specific office. They're not local officers. They are state officers, although they run on county ballots. Judges weren't contemplated in the intent of 571 and part of the overall discussion when it was going through the legislature. And I think lastly, the judges in the act, when something in the act applies to judges, they're specifically called out in the act, and in this one they're just not. And so all of those factors, I think we're safe to conclude that the default contribution limits would not apply to judges, and the judges continue to benefit from not having any contribution limit.
Okay.
All right. Well, with respect to the four bills for which staff has recommendations on our positions, I agree with staff's recommendations. I'm happy to approve them. Commissioner Hayward, what do you think?
Yeah. Yeah, me too.
Okay. All right. Mr. Ong, I did want to ask you a question, though. Commissioner Hayward, I don't know whether you've received it yet or not, but last week, I had asked Mr. Ung to work with Mr. Bainbridge on the LLC legislation. Because I think there are, it's easy for us, I think, to say broadly that we would like to know the people behind LLCs and the sources of their money. In actual practice, getting down in the weeds, staff's going to need some more refined direction on that. And so I asked Mr. Ung and Mr. Bainbridge to put together a breakdown that would help educate us as a threshold matter on what those different options look like. So Mr. Ung sent, I think he sent it to you this morning, a memo that lays out broadly speaking, those three policy options that we have. So I was sort of hoping that, and since you just received it this morning, maybe Mr. Ung, you could just quickly sort of provide an overview for us so we can start thinking about this in anticipation of next month, giving some more concrete direction on it.
Yeah, and without going into painful detail on these issues, kind of a macro sense, there are three policy options highlighted in this memo. The first one is essentially allowing LLCs to continue to register and file under the existing committee structure, whether they qualify as a recipient committee at $2,000, an IE committee at $1,000, or major donor at $10,000. Have them continue working through that structure, but we add a few additional tweaks on top of that are unique to LLCs so that we can get to the goal that the commission highlighted, the two issues of source of money and naming of an individual. So that's the first policy option. The second policy option is kind of stepping away from the existing structure and to build a whole new structure, essentially a whole silo just for LLCs. Based on their level of activity, almost identical to what we do for multi-purpose organizations, that they qualify at a different threshold, and that there's additional disclosure and accounting rules that are unique to LLCs, and the thresholds are just different generally. That's the second one. And the third one is what I'm generously calling the New York State model, where regardless of either their activity or if the commission would like to see a threshold, depending on the level of activity, an LLC would just have to disclose their ownership, their direct and indirect ownership on a disclosure that the timeline is yet to be determined, but in New York State, it is they have to disclose their list of owners by December 31st of that year, no matter when they participated in an election. And so those are kind of the three broad models or policy options that are highlighted in the memo. And each of them have their pros and cons. None of them are kind of exclusive to each other. So if you wanted to start to meld some of these, you could. For the sake of the memo, I tried to organize them in these ways because it seemed the cleanest. But obviously, it's up to the commission on kind of what combination of these issues or solutions they'd like to put together in hopes of achieving your goals.
Thank you.
Okay. Yeah, I didn't have the chance to really look at this very carefully, I have to say.
What do you think about providing it to the other commissioners ahead of our meeting next week, so we can all have at least have the education to begin the dialogue next week, so that we can start getting Mr. Ong in the direction he needs to work with legislative staff?
I think that's a great idea.
All right. I think we'd like to have this distributed to all commissioners ahead of the meeting next week.
Thank you. And Mr. Chair, I'm happy to run through the rest of the bills in my reports.
Yes, please.
If now's the time. So as far as active bills, Assembly Bill 1217, which deals with disclosure of funders behind issue and electioneering ads. That bill has been sitting in the same place since last year. We haven't had any stakeholder meetings on that bill, and so we are waiting for Mr. Mullen bring the group back together, bring the band back together, so we say, to start discussing that bill again. But until then, there's just no update on that ongoing legislation. Assembly Bill 2079, which is the next bill in your report, deals with contribution prohibition on investor-owned utilities. The author, Mr. Kiley, is introducing this bill, and his fact sheet mostly highlights Pacific Gas and Electric. However, there are 3 investor-owned utilities that make contributions in the state, and that's Pacific Gas and Electric, Southern California Edison, and San Diego Gas and Electric. We're still looking at the bill, and we sent a list of questions to Mr. Kiley's office regarding kind of the scope and the broadness of the bill. Right now, the bill is a couple sentences long, and so it's hard to tell whether or not how much he's capturing, whether or not it is just direct contributions to candidate elective committees, or does it include contributions to political party accounts that spend money on state elections? Does it include candidate-controlled ballot measure committees, legal defense funds, all of those things that, all the different ways that the act permits money to flow through kind of related entities that are controlled by candidates. And so until we get that information, it's hard to tell kind of the scope and the broadness of the current bill. Additionally, I asked them whether or not these IOUs, if this bill was to pass, could create what Commissioner Hayward brought up earlier, separate segregated funds, or essentially employee committees, where they have employees make voluntary contributions into a committee that is controlled by that particular entity. That's a solution that the federal government or the federal law has allowed under their business and union prohibition. So we continue to look at this. We're also looking at the constitutionality of this. There's a whole lot of case law behind that, so there's no shortage of analysis on that. The next,
Can I make a
yes,
suggestion?
please.
Do you want to hold Assembly Bill 3078 till the end? 'Cause
Yeah,
I
I was
suspect
going-
we may have a more
Yeah.
in-depth conversation about that.
Senate Bill 300, which deals with foreign contributions. I haven't heard any updates on that bill. That continues to sit in the Assembly Elections Committee. It doesn't need to be taken up at all for the next couple of months, but it will probably be taken up in June if the author wishes to move it. And the last bill before we jump into the behested payments discussion is Senate Bill 1014 by Senator Allen, which deals with recall committees. There's a lot of moving pieces to this bill. This bill is contingent upon the passage of a constitutional amendment that Mr. Allen is pursuing that would essentially change, and I'm not an elections attorney, so sorry if I butcher this, so essentially change the nature of how candidates are listed on a recall election ballot, so that there's not 2 separate questions. Right now, there are 2 separate questions. Do you want to recall this person, and who's going to replace the person? He wants to make it one whole question of who, essentially a whole special election related to a recall. And so that's what the Constitutional Amendment, I believe, would do based on the briefing and information I've received from his office. And 1014 would do some of the implementing statutory work related to that constitutional amendment. And since they're essentially moving recall measures or changing the recall so that they're no longer ballot measures and it's essentially a candidate race, they wanted to put a contribution limit on the public official who is listed on that recall. So sorry if that was very convoluted, but like I said, there's a lot of moving pieces on that one.
Understand.
And so that's it for active bills. There's a couple of spot bills, one of which is a spot bill that I highlighted earlier by Ms. Rivas that deals that will likely become our Form 700 e-filing bill, or I won't say R, but a Form 700 e-filing bill, and then Senate Bill 1436 by Ms. Grove, which appears to be truly just a spot bill with no intention of it being a political reform act bill in the end. So on that note, happy to just start a discussion on Assembly Bill 3078, which is Ms. Garcia's bill related to behested payments.
That'd be great. And if you could maybe begin, I know Commissioner Hayward had expressed her perspective earlier that this seemed to be aimed at PUC members, which, by the way, when I first read it, I thought the same thing. I think there's a comma that could be added there to make it clear, but
Yes.
go ahead, why don't you tell us what the bill does?
Well, the bill does apply more than just to the PUC. It applies to essentially all elected officers and members of the PUC. Yeah.
Oh, okay.
Yes. And this is a very nuanced issue because it's essentially it's at the intersection of both statute, regulation, and advice. That the statute that's currently on the books and the regulation, specific our safe harbor regulation, sorry, the number's escaping me, Dave, is it 18215.3, not that it matters, but and some advice letters, specifically an advice letter that was issued to Lawrence Weiner. All of those things have culminated into what Ms. Garcia believes is potentially a conflict in advice that was given, and some, not inconsistency, but what's the word I'm trying to look for? There's some confusion as to what the responsibilities are for public officials who are named on a fundraising or invitation to a fundraising event, even though that public official did not consent to their name being on the event invitation or had knowledge that their name or face would be on that specific invitation. And in some instances, the public official is only serving on, say, an honorary committee where that allows the organization to raise funds and promote kind of the support that they have from these elected officials. And so she's really aiming it at that specific issue. At least that's what her fact sheet and my conversations with their staff have revolved around.
So can I take a step back? Can you
Please.
just,
Yes.
what does the bill do, and how would it change existing law?
Well, that's
I mean, between you and Mr. Bainbridge, you guys decide how you want to answer that.
right. Well, there's I think the bill achieves what it is that she's trying to do, but does much more than that also. In that it may carve a very large exception into the behested payment rule based on my reading of it, that if a public official isn't making a direct written or verbal solicitation, that essentially is not a behested payment. And so if they were to, and that brings into question how our coordination or at the consultation of an official as it relates to behested payments, how that rule would apply under this interpretation of a direct verbal and written solicitation. And so that's where our eyebrows start to get raised about, okay, what does that all mean? And the bill also says that a direct written request, it's not a direct written request solely because the name, signature, photograph, or other identifying information is included in the invitation to the event. And so it's tough to craft policy when you're saying what is not essentially policy by the negative, and for us to try to figure out, okay, so if we're not basing it solely on name, signature, photograph, and other identifying information, what are the factors that we can take into account? And that's where it gets very difficult. And what if it's a combination of these things? What combination of things does it would trigger a behested payment report?
So under existing law today, a behest can occur directly. It's my understanding, please tell me if I'm wrong about this. It can occur under a situation where somebody directly, an elected official directly requests a contribution to a charitable organization. That's one way. But that's not the only way under existing law. You could have an indirect behest, is my understanding, that we've said that, so that if an elected official coordinates with a third party to get a behest, that is still a reportable behest. And I guess at this point, I just want to emphasize, under the current rules, all we're talking about is reporting a behest. There are no limits, there are no contribution limits, so to speak, on behest. This is simply transparency so the public knows when a public official is essentially asking that money be sent to a particular charity. Is that right, Mr. Bainbridge? I mean, today you can behest in all sorts of ways.
Yeah, the made at the behest of is, under current law, means control or at the direction of, cooperation, consultation, coordination, or in concert with, or at the request, suggestion, or with the express prior consent of the elected officer. And then this bill would significantly narrow that to basically a direct solicitation, the way it's currently drafted.
Okay. The impetus for Ms. Garcia introducing this bill, as Mr. Ong described it, sounds like, and tell me if I'm wrong, but it sounds like her concern is that somebody uses an image of a public official to solicit funds for a charitable organization without the knowledge, consent, coordination, et cetera, of the public official. Is that an accurate summation of what her expressed concern is?
And that's where it gets a little nuanced, because the public official did consent to serve on the honorary committee.
But that's not what I said. I said on the, using their image
Right.
on the
Right.
solicitation.
Based on the information I was able to receive from her office, that the solicitation went out touting the public official being on the honorary committee. And so that's where she did consent to be on the committee, and they were touting her position on the honorary committee as part of the solicitation. And that's where it gets, I think, for them potentially a little dicey.
All right, but I think the answer to my question is yes, that
Yes.
under that circumstance, her concern is that she did not specifically approve the use of her image on the solicitation, right?
That's correct.
Okay. Mr. Bainbridge, in the current rules, is the inquiry as to whether or not there's an indirect behest, kind of a fact-dependent type of an inquiry?
Yeah, and I think that's where some of the confusion is coming from with the advice letters. The Wiener advice letter back in 2014 had a footnote that said essentially that these are fact-based, and if someone does not know their image is going to be used, it's not made at their behest. However, if they are in some way otherwise involved and aware that their image may be used, it can be a behest, regardless of this standard of featuring. So it comes down to what we've defined as featuring, and whether featuring is an absolute rule, or if you can have featuring and then still meet the first definition, the broader definition of behest, which is all those terms I read earlier.
Okay. Under our existing structure for analyzing behest, if a solicitation goes out that features a public official, and that public official has said in writing to the organization, I don't want to be featured on any solicitation, but nonetheless, the solicitation goes out, is that considered a behest under our current rules?
If that's the whole universe, our advice would be that there hadn't been a behest at that.
Okay. All right. All right. Under our existing rules today, if, let's say, I'm an elected official, and instead of directly asking somebody to make a contribution to my favorite charitable organization, I call up Commissioner Hayward and I ask her to make the phone call on my behalf. Is that considered a behest under our current rules today?
I don't know the answer to that offhand. I mean, it sounds like a basic agency issue where you're having someone do it on your behalf.
Right.
So I think it would be.
Okay. Under the bill, as I'm seeing Chief of Enforcement West nod her head in the affirmative. So let's assume for the sake of this discussion that we most likely would consider that to be a behest. Under Assemblywoman Garcia's bill, would that still be a behest, or would that no longer be a behest?
I have to look at the bill. I haven't.
Mr.
There's
Ong?
some,
I mean, it says direct written.
I feel bad because I can never give you a yes or no answer.
Here,
Mr. Chair.
I'm ready to give one. Yeah, that doesn't sound like it's direct, as I understand the word direct.
Okay.
So,
And it
or
wouldn't
at
have
least
been
there's an argument that wasn't direct because it went through another person. I think that's one of the things we'd want to work with them on, in terms of wording.
Yeah, I mean, that is my concern, just plainly stated, is this seems to significantly narrow the universe of what is considered to be a behest, when in fact the concern that I understand the assembly member is raising, legitimately, somebody is in an unauthorized fashion using her image. I can empathize with that. But the solution they're offering is so much broader. It swallows just about everything except a direct written response. Chief Enforcement West, did you want to say something? You were sort of raising your hand back there.
Keep your head still.
I was just going to ask that question.
Don't move your head.
Yeah, because under the definitions, like if you look at 8204.5, it's where it specifically says the agent of the official as well. So how these bills would interact with each other would be something that we would need to explore to figure out if we're deleting agency requirement by overruling it with direct. That would be my only comment.
Executive Director Jones?
Thank you. We're using the term charitable organizations loosely. This bill, just for clarification purposes, applies to all 501 corporations, which goes far beyond just charitable organizations.
The bill does include the inclusion of agents of a public official. So if the agent made a direct written or verbal response or request, then I think it would be captured.
If it was in writing.
If it was in writing, yeah.
But if they picked up the phone and called, I mean, this is another
Well,
example
that-
of how it's,
right.
it seems to be written to significantly restrict the circumstances in which the public would have the benefit of disclosure of a behested payment.
And I think that's where the current proposal, which I believe is 2 or 3 sentences long, could be refined through further discussion with Ms. Garcia's office, which they have expressed they're open to, partly because the advice letters that are being referred to and the regulations are quite more than 3 sentences just to get us to that place. And so, yeah, there's definitely a lot more refining and development on this bill that needs to take place.
All right, thank you. Mr. Bainbridge, one final question for you. This does seem like an area that, at least from the public officials' standpoint, could benefit from some very clear standards of, this is a behest, this is a behest, this is not a behest, as opposed to what I would characterize as more of a fact-dependent inquiry. Maybe that's asking too much because of, there's so many different permutations in which this may take place. But I know we've done it in other ways. We've started doing it in conflicts where we've sort of started setting more uniform standards. Do you think this is an area where we might be able to provide some more concrete, sort of categorical guidance to elected officials?
Well, yeah, as you said, it's a very fact-based analysis, but we can try. We can look at it and think about it and see if we can come up with ways maybe to rephrase our own regulation or what they have drafted here that might give a little more instruction.
Commissioner Hayward, any thoughts, comments?
No, I mean, this ties in a little bit with the behested payment inquiry that we talked about earlier. And I think there's definitely, obviously, room for improvement. And nobody wants people to be saddled with solicitations that they, haven't been a part of. On the other hand, from what I'm hearing, this bill is quite overbroad. So.
All right. Well, Mr. Ong, thank you for walking us through that. For my own part, I'm happy to hear that the author has expressed a willingness to engage with us on this, because I think, as I said, as I hear Commissioner Hayward saying, there's some significant concerns about this being way overbroad for what they at least have expressed as being their intent. So I look forward to hearing from you on how those discussions go. Do you have anything else for your report?
That concludes my legislative report. Thank you.
All right, thank you. Good job. All right, anything else for the good of the order, Commissioner Hayward?
Not from me.
Right. All right, well then I'd have a motion to adjourn.
Sure, so moved.
All right.
Commissioner Hayward,
Yes.
Chair Matich.
Yes. Thank
Motion
you,
approved.
everybody.